Gold's broken out and has tried to get to new highs several times in the last couple of years, but silver's way behind its all-time highs. It took a long time to get here, but I think gold and silver have begun big moves. I continue to say we'll see gold up at 3,000 this year, and I think that's conservative. I think, or I say pre-bust. So if the bust gets extended into the first quarter, then it might take a little longer. But pre-bust, I think 3,000 on gold is a conservative number. Silver, I have raised my target from 60 to 75, and that's a long ways away.
The precious metals market is experiencing turbulence, with both gold and silver facing selling pressure. As of Thursday's early European session, gold dropped to a 2-week low, finding support near $2,365. Despite this dip, the market remains optimistic about gold's prospects, buoyed by expectations that the Federal Reserve will initiate rate cuts in September, keeping the US dollar subdued. Meanwhile, silver plummeted to its lowest level since May 9th, hovering around $27.80 during the Asian session. This decline has pushed the gold-to-silver ratio to a 2-month high, exceeding 82 points, a 14% increase from May's multi-year lows. Amidst this volatility, DavidHunter, chief macro strategist at Contrarian Macro Advisors, offers a bullish outlook for both metals. Hunter predicts gold will reach $3,000 this year, a conservative forecast. For silver, he has revised his target upwards from $60 to $75, anticipating more than doubling its current value. Hunter's analysis suggests a potential narrowing of the gold-to-silver ratio from over 90 to around 40 or 45. This projection implies that silver could outperform gold significantly in the coming months, even as gold is expected to perform strongly. The contrasting performance of these precious metals is evident in their current market positions. At the same time, gold struggles to maintain support at higher lows, around $2,400 an ounce, and silver grapples with the $29 an ounce mark. This disparity has contributed to silver's recent underperformance relative to gold. Please tune in for our exploration of DavidHunter's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
I think gold and silver, after a very long wait of years for silver particularly, gold's broken out and has tried to get to new highs several times in the last couple of years. But silver's way behind its all-time highs. It took a long time to get here, but I think gold and silver have begun big moves. I continue to say we'll see gold up at 3,000 this year, and I think that's conservative. I think it might take a little longer, but pre-bust, I think 3,000 on gold is a conservative number. Silver, I have raised my target from 60 to 75. And that's a long ways away. I mean, we're down around 29 or thereabouts 30. So it's much more than double. And the miners that go along with that, I think will get all the benefits of big moves in the metal prices. So I'm very bullish on both of the precious metals for sure. It could happen this year or it could spill into the first quarter. I think it's pretty much, it's a pre-bust number. So it kind of, again, you're right. It's from here, say from 30 to 75 is a huge move. So I don't think it happens in 3 months. But, if you get this thing going, silver has a history of once it becomes very clear that it's in a big bull move, it can cover a lot of ground in a hurry. So I would say certainly first quarter next year is a real possibility. It could, if things really get going here, it could happen before the end of the year. And if not all of it, certainly a lot of it, I think, does occur here in the next 5 months. If you go back even more recently to 2020, you had a move from, say, April, May to August that was pretty fast and steep. So, yeah, that's its history. And in the bull market for the metals, silver does outpace gold almost always. So, on the way down, gold holds up better. Silver gets hit harder. On the way up, silver has a catch up. And I don't know where the gold-silver ratio is right now. It was up over 90, I think. But I think you could see that down to somewhere near 40 or 45 in this move. So silver definitely looks like it's going to outpace gold, and gold's going to do pretty well itself. So
DavidHunter suggests that the Federal Reserve might cut interest rates as early as the July 31st meeting. Though he acknowledges this isn't guaranteed, he argues that with the economic slowdown evident and inflation trending downward after a first-quarter uptick, a rate cut would represent a necessary policy adjustment rather than a sign of panic. In September 2021, after experiencing 3 months of price hikes that exceeded the Federal Reserve's 2% target, U.S. central bank staff and policymakers began to describe inflation as elevated. This shift in tone was triggered after the Personal Consumption Expenditures Price Index, which the Fed uses to set its inflation target, topped 4% in May, June, and July of that year. Despite the PCE now falling to 2.6% and continuing its downward trend, the elevated inflation description remains in the Federal Open Market Committee's policy statements. However, Fed staff stopped describing inflation as elevated in January, when the PCE fell below 3%. As policymakers head into the July 30th and 31 meeting, they have noted that inflation is slowing more broadly across the economy, building their confidence that this trend will continue. They have started using phrases like drawing closer to describe the remaining distance to a policy shift, and have hinted at potential thresholds that could warrant changes in how the Fed describes the economy and its policy responses. Let's get back to the interview.
I'm continuing to say we are in a melt-up and heading for a parabolic melt-up, which means it'll get steeper until it actually goes almost vertical. So, as I say, you can look at Netflix to get an idea what a parabolic looks like. It just kept going and picking up speed as it went. So that's kind of what I expect here in the next 2 or 3 months in the stock market. We had this recent pause, short-term pullback. And you see a lot of people coming out of the woodwork saying the top is in, we're going down. That's healthy. That's what you want to see, is people still being very skeptical of this market. At some point, probably in the next month or month and a half, you're going to see everybody on board and taking it to the top with, talking about a much longer bull market here. It probably gets triggered by the Fed ultimately finally easing, or at least it becomes, foregone conclusion it's getting close. So I have said I think we could see a rate cut in the July meeting, which is July 31st. Doesn't have to. They may continue to say we're going to wait for September, but we are seeing slowdown in the economy, no doubt about it. We are seeing inflation trending back down after the first quarter move where it started to turn upward again. So I've heard some talk about if they cut in July, it looks like they're panicking. Are you kidding me? They've been on the tight side for more than 2 years. So, moving a quarter point in July is not a panic. It's not a sign of a panic in any way. It's a sign that they say we are slowing to an extent where we think we need to get started on the other side. So whether we get it or not, I think the market's moving up. Bond market is moving up, so rates are coming down, whether the Fed cuts or not. However, if the Fed does cut in July, it does. I think people jump on jump on board on the basis that a turn in Fed policy to ease and with further rate cuts to come is a sign that you can start looking over the trough and look to the next, the rise in the cycle. We haven't even had a recession, so it's hard to talk about a next cycle, but it does, at least I think the street will, the narrative will be that the soft landing that the Fed was trying to engineer was successful, and that now they're comfortable that they've gotten inflation down and probably very close to their target, and that they can start going the other way, and that's bullish for stock. So that's what I think the final few months of this run will be. As I said, investors, the narrative will be that there's a much longer run. I believe it ends probably this year and maybe sooner rather than later, meaning pre-election. But who knows? Trying to call it down to it's a 42-year secular bull market that's coming to an end. Trying to call it down to the month or even the quarter is probably not particularly realistic. But I'll give you what I think, and I think we will see that top this year.
As we've explored the current state of the precious metals market and potential shifts in Federal Reserve policy, how might a possible interest rate cut in July impact the trajectories of gold and silver prices, And what implications could this have for the broader economic landscape in the coming months? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.